I'm going to backtest the LCE model in real time and walk you through every trade, start to finish. And this isn't going to be a highlight reel where I just show cherry-picked setups. I'll show you an entire week and show you every setup the system produces and break down exactly what I'd look for, where I'd enter, where I'd pass, and how I'd manage risk. The goal here is to show you how to trade the market in real time and follow the process. Because most traders break in the moment, when it's not obvious, when your brain starts second guessing and wants to force something that isn't there. And if you don't fully trust your system, you'll interfere. You'll tweak rules mid-trade, you'll exit too early or hold too long. And every time you interfere, you trust your system even less. That's the loop that destroys consistency. But once you see the system play out again and again, your brain stops fighting it. Trust builds, hesitation fades, and you start executing clean. So let's lay out a couple of ground rules for this backtest. First, every trade must follow the LCE model. Level, confirmation, execution. If it's not a level-to-level trade, it's not a trade I'm considering at all. If you're new to LCE or need a primer, I'll link a few videos right now for you to watch later. Second, I only trade during regular market hours, 9:30 a.m. to 4 p.m. Eastern, and I'm typically done before noon. I live in the Eastern time zone, and this is also when there is the most volume and price movement typically. Third, I'm only taking breakout trades. That means I'm not looking for trades where the price returns to the level that it came from. I'm looking for trades where the price breaks out to a new level. And finally, I risk the same amount for every single trade. Risk stays consistent no matter what. Now, I'll be backtesting ES futures, and by the time I'm recording this video, the most recent week was October 6th to October 10th, so that's the week I'll be backtesting. Let's begin. Starting with Monday, this is what we see. This is on the 1 hour. We'll be opening in a supply and demand level here. And we notice that the cloud is bullish overall. That means that ideally, we'd want to be looking for a breakout trade higher on our execution time frame here. But once again, this is just the ideal. It doesn't mean it's going to happen, but that would be our A+ setup if we're looking for one, because the trend would align on all time frames. Now, let's zoom into the 5-minute to get a better look. We want to map out our two possibilities for the day, based on the current market structure. And we want to keep this as simple as possible and only consider those two moves to trade. The first move is a break of the upper supply level, and we would be looking for a breakout of this level to the next level above. That would be the ideal A+ setup since it aligns with the higher time frame cloud. The other possibility is that we break to the demand level below instead, and in this case, we would be looking for a breakout of this level to the level under. This scenario isn't ideal because it doesn't align with the higher time frame cloud. We would need to get some stronger confirmation in market structure before taking this trade because we would need to break through a lot of support. Any trade besides these two is not something we'd consider because it wouldn't be a breakout trade and would be a trade within this range, which is lower probability and much more random. So what I do now is set alerts around the middle of each level and then simply turn off my screen and wait for one of them to hit. Once one of them hits, we can open our chart back up. Now, here we see that we dropped to the bottom level but couldn't break it decisively. The higher time frame cloud came in and pushed it back up. Now we're breaking the upper supply level. So here we'd be looking for a long and target the next supply level. The cloud flipped bullish, and we have decently strong confirmation from price action that this will continue breaking out. So we enter long with a stop under market structure and a target at the next supply level. Then we simply wait for it to play out without interruption. Now, unfortunately, this happened too late during the day, and volume dried up, so we never got the full move before the market closed. This trade would have been either a little green or break even. So, your results for Monday following the LCE model would have been either a partial win, break even, or it could have also been a loss if you took the first trade of the day and entered too early. Now, this does happen sometimes because we obviously can't get every single trade right all the time, and it's just something we need to accept. But for this move specifically, it was less likely to work because we were trading against a strong bullish cloud on the higher time frame. That doesn't mean it was impossible and couldn't happen at all, but we would have probably needed more bearish market structure building around here before taking the short and more aggressive selling pressure. This move didn't cut it. So that's how your Monday would look if you were following LCE. Now let's move on to Tuesday. This is the 1 hour right before the open. We're about to open in between two levels. The first thing we notice is the cloud, which is still bullish, although the slope is starting to flatten a little compared to Monday. But we're bullish, so the ideal scenario here would be to break above this supply level and target the next one. And the bearish case here would be that we break under this demand level and target the next one. So once again, we go down to the 5-minute and set our alerts at each level. Once each alert is set, I simply close my screen and wait to get notified that my alert got hit. Now here we see that the price is breaking down aggressively. We're clearly breaking through the previous trend structure, and the 5-minute cloud is beginning to slope down. And if we look at the trend structure above, we had two very strong rejections. So if we combine this with the slightly weaker higher time frame cloud, we see that this breakout is more likely to happen than not. So here we enter short, with our stop above market structure and our target at the next demand level. Then it's hands off the mouse, close the screen, and we simply wait for it to play out. And this move happened rather quickly with a very clean and strong break lower. Now we nailed our one win for the day and simply log off here. And if you missed this trade, you could have also gone for the next short here, since all conditions are still pointing for this to break lower. So that was Tuesday, where we would have nailed a clean breakout following LCE. Let's move on to Wednesday. Now for Wednesday, we're opening at a supply and demand level and looking for a breakout, so it's the same thing. We're not looking to trade a level-to-level move here, and instead looking for a breakout of this range from the level above or the level below. So we set our alerts on both sides and wait for one of them to hit. Our upper alert got hit, and the price here is once again very aggressive to the upside. The cloud is sloping up slightly, and these two factors tell us that probability points to a breakout rather than a return to the range. And it's the same procedure we enter long, with our stop under market structure and our target at the next supply level. If you want a general rule of thumb as to where to place your stop loss, it should be somewhere in the middle of these two levels. Don't place it too close to the level because market structure might still develop and stop you out before the move happens. Don't place your stop too far either, like all the way at the next level. Putting your stop all the way there is unnecessarily wide and will just cost you extra risk for nothing. If the market goes all the way there, you already know way before that your move is wrong. So why risk all that extra space? Then we simply wait for the move to play out, and we don't need to stare at our screen again either, because we'll just get alerted when either our stop or target gets hit. So this is what happens. Another successful breakout trade with clean profit. Now let's move on to Thursday. Now on Thursday, we see that we're going to open at a supply and demand level. And the market here has been in a range all night, so we're clearly not looking to take a level-to-level trade here. As always, we're looking for a breakout trade to either side, or we're not interested. So we set our alerts at the level above and at the level below. Now the trend here is still slightly bullish overall. Ideally, we'd want to see trend continuation here with a break above these highs. But if we have a strong enough case to go short, we'll take the short. So let's wait for our alerts to hit. And here we see that the market dropped straight at the open. We had a breakout attempt here, but we couldn't even crack the previous highs, let alone the supply level itself. So we rejected and immediately dropped lower with aggressive price action. And we also see that the cloud flipped here. What we're looking for is a good enough reason to take this breakout trade, and we'll use the cloud and market structure for that. The cloud was flat and now just flipped bearish. This is a decent indicator that the price will continue going lower. Then we have this break of market structure out of the range with aggressive price action. Now the overall trend is still somewhat bullish, but it's been bogged down in a range the whole week. The higher time frame cloud has barely been able to keep sloping up, so it's not enough of a strong factor to prevent the market from going down. Now based on what we see here, we can assume that the market will continue dropping to the next level, rather than returning to the level it came from and go short. As usual, we place our stop above market structure, and we place our target at the next demand level, and then wait. And we got our break lower. That's our win for the day, which we can lock in. Now let's move to Friday. Now, for Friday, similar situation as yesterday. trend is slightly bullish but pretty much flat at this point and can go in either direction. We are once again looking for a breakout to either side or we won't take a trade. So we set our alerts at both the level above and below and then wait for one to hit. It's the same process every single day. Okay, so what happened here is interesting. We barely peaked into the supply level before rejecting it and couldn't even get above our previous high, let alone stay in the zone for more than a few seconds. We then rejected it and ranged for a little bit here before the price absolutely tanked. This happens every so often because of news or a surprise event, and it's not something you can really prepare for. So when my alert went off here, by the time I checked, the price was already way too far gone. It was already halfway to the next zone, so I simply didn't take a trade here. Remember, don't force anything when the market gets too difficult to execute, because you're going to disappoint yourself. You should only trade when the market is easy and obvious. If you happen to miss a trade here like I did, there is absolutely no point in taking another trade. The market doesn't have to give you a trade every single day. It will do what it wants, when it wants, and we simply need to follow along as best as we can. All right, so let's look at the typical results you would have gotten for the week, assuming you followed the LCE model. Now on Monday, we're looking at either a small gain of maybe half risk, or a -1R if you took that first trade. That's the range of results you'd typically get. On Tuesday, we had a clean level-to-level trade. Depending on where you placed your stop and where you entered, you can expect a 1.5 or a 2R. On Wednesday, same thing. We had one clean level-to-level win, and we can expect it to be in that range. On Thursday, we also had one level-to-level win, and we can expect a gain within that range again. On Friday, we either didn't take a trade because we missed it, or managed to snag a quick short if we got in early. So this is going to be a 0 or a 2R gain for the day. And if we stack it all up, we can expect a 3.5 to an 8.5 R gain for the week, worst to best case scenario. And depending on how much you risk per trade, you can expect that R multiple as your real gain for the week. A good system should bring in 10 to 20 R per month, so this week's performance would fall within that range. And by the way, I have traders in my mentorship that have achieved these exact weekly results, many of whom were in their first week of the program. Some got funded in just a few days. So if you're interested in joining, click the link below. And be sure to leave a like and subscribe, because I drop videos like this every week. I'll see you next time.